clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips, you could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia and Biba.
Raindrops on roses and whiskers on kittens. Yes, on the one hand, you've still got the red-hot semi industry, which has been on a tear since early 2016, right after the market lows at the diamond bottom. Now, that VanEck Vectors Semiconductor ETF, ticker SMH, has gained 35% year-to-date. It's also up 8% just over the past month. At the same time, you've got another top tech performer in Apple, which is up 35% this year. But if you narrow in on just the last month, it's been a laggard, down 3% in that time frame. Apple has been one of the biggest drags on the Dow over the course of the last month or so. Now, semis are on a 12-day winning streak. Trying to put a streak together and trying to recapture record territory is Apple. So, Melissa, two tech stories playing out very differently, at least over the short term. Back over to you guys.
All right, thanks, Dom, and feel better.
I'm out of here.
Let's grade this. XLK, by the way, had its highest close since 2000 here, so we're talking about really strong performance across the board in technology. Apple, though, has been sitting out that rally. Our next guest says now is the time to buy. Dan Niles of Alpha One Capital Partners joined us now on the phone. Dan, great to have you with us. I hear you bought Apple. More shares.
Yeah, we did. I mean, Apple sort of has this pattern, whether it makes any sense or not, and I would say in general it doesn't, but it tends to rally into these product launches. And so if you kind of go back and analyze the stock, it's a pretty predictable pattern, and then it tends to struggle on the other side of it for a month or so. And so I think from a trading perspective, at least, for the next month or so until October 27th, when the iPhone 10, you get to pre-order those, I think the stock will probably do well. Because you're seeing analysts come out every day pretty much and cut their numbers on Apple, and the stock's starting to move up anyway and starting to finally outperform.
So you're looking at this as a real sort of fast money kind of trade, Dan. I mean, the holding period is just for a couple of weeks, and you're not even waiting for the iPhone 10.
Well, but the point is that the stock reacts well in front of it. I mean, let me put it to you this way, and I've said this before. Over a longer period of time, and by that I mean like once you get out past this launch, I have some real issues on how well Apple will do. How well is a $1,000 iPhone going to sell? But you've seen estimates come down for the last year on Apple, and the stock's up 35% because everybody has convinced themselves in a raging bull market where I think the S&P has been down once in the last 20 months that Apple's a great buy. And really nothing's going to change until the iPhone 10 comes out and people figure out, hey, are you willing to spend $1,000 on a new phone or not? So, yeah, I mean, from a short-term perspective, that's why we own it. The long term, which you didn't ask me about, we've got a lot more concerns on it over the longer term, which is kind of how we tend to invest. So this is definitely a more short-term view on our point.
Right. And Dan, in the past, you've told us about some of your supplier investments, Apple supplier investments. Lumentum is one. That stock is up 50% this year. Are you still holding on to Lumentum?
Yeah, we are. And quite honestly, that's the most exciting thing about the iPhone 10 are the augmented reality capabilities and the Face ID. And you can't do that without the lasers provided by companies like Lumentum. We also bought some Finisar recently. They're going to get designed in, or at least we think they're going to get designed in and get qualified into the Apple iPhone. They've been delayed a quarter. The biggest issue with both of these stocks, Lumentum and Finisar, is they're both in the optical space. As you know, NeoPhotonics pre-announced negatively last week. Juniper obviously pre-announced just tonight after the close. So the core business is obviously still challenged, but I think if you look out to 2018, I'd much rather own the 3D laser suppliers into Apple rather than Apple itself.
So, Dan, you know, your Apple call is obviously pretty short term. It sounds like you don't even want to wait around for the reviews of the iPhone 10. When you think about it, the reviews were very disappointing for the 8. They were disappointing for the watch. And then are you also worried that the supply may be really constrained this thing? So you may have a push out of a lot of iPhones given all the reviews if this one's not good.
Yeah, but, I mean, think about it this way. I don't think the reviews are very good going into the launch that we had in early September either. So why launch the 8 when you've got the 10 sitting out there and you're not putting them both out at the same time? But the stock ran up into that print. By the way, we were long going into that product launch as well. Turned around and sold it. Shorted it, actually. Waited for it to drop and then bought it back. So the problem with Apple right now is the problem with the entire tape, which is, you know, you're in a really big bull market and people are trying to find cheap stocks to own. You're exactly right. The reviews have not been good. But I would argue they weren't that great going into the launch in early September either, and people didn't care. They just kept buying it because they wanted to buy something.
No. Dan, the stock might have run into it, but the stock has really acted very poorly since the reviews came out the weekend after the launch. So that's what I'm really talking about. And it was the same thing for the watch. So the stock has just bounced over the last week. But, I mean, this could be the sort of trade. What I'm trying to get at is if our viewers are watching this show and they're going along with Dan Niles and they don't sell the day before the phone comes out and the reviews are bad and the supply is constrained, they may see themselves looking at this stock in the low 140s. That's what I'm kind of trying to get to.
Yeah, I completely agree.
Okay.
I mean, I'm not, this wasn't supposed to be an Apple call, but yeah, I mean, that's the way I'm looking at it. I mean, we have a lot of other stocks we like a lot better. We like Facebook, which we own. We think that's going to do great. Results are good. You know, we actually own some Netflix. We own some Alibaba. So there's a lot of names in the tech space, big names that we think are going to do quite well. Apple just doesn't happen to be one of them.
All right, Dan, we're going to leave it there. Thanks so much for phoning in. Always great to speak with you.
All right. Good to speak to you too, Melissa.
Dan Niles, Alpha One Capital Partners. Pete, would you agree with Dan in terms of this sort of seasonal trade for Apple? Does it apply this time with the phone split, 8 and 10 split?
I can understand that. Yeah. I think you use these opportunities on sells to, if you're already in the stock, to add to it. I don't know that I want to play the game. I think that's sort of where Dan was going, was timing the selling of this thing in terms of, am I going to sell the top and then be able to buy this thing back? So I own the stock. I have for well over a decade. I'd probably buy it if I got enough of a pullback. Katie Huber today from Morgan Stanley was out here. She raised not only her price target, she also raised her unit sales of 2 million for the iPhone. And then she even actually talked about the watch and what a surprise how good that is. So she's always talking about retention. The retention level is something I think a lot of people really miss out on. They don't really get it.
And you're bringing up great points, Dan, certainly in terms of the momentum of the stock and how it's going to trade. But I mean, these reviews are going to have to be awful for this to not still be a fantastic refresh and release for these guys. And I think all the reasons why people were pricing this thing going into that.
They really don't have to be awful. It could be as simple as the facial recognition doesn't work.
Doesn't work.
Right. And then it's awful. I mean, it could be that simple. And that's what I'm getting at is like this is supposed to be this huge leap for a company that literally for 4 iterations of their iPhone.
Will buy a Samsung and then they'll go, no.
But they'll buy an 8.
Correct. Well, there's pent-up demand, I think, the 8. So the 10 comes out and the reviews are poor. They may just go to the 8. Right, so the point is, because there are people on the sidelines that are waiting to get a phone.
This 8 was the most iterative upgrade.
It wasn't a big deal.
It wasn't a big deal, but how many people own a 6 really need to upgrade?
We've had AntennaGate, we had Sirigate, we had MapGate.
And in the end, they didn't mean any.
Because there was a huge No, see, I'm telling you, you're wrong about that. I love you to death.
No, I know. You can tell me I'm wrong. That's fine.
You're not.
If you think about the stage of smartphone adoption globally, that's what happened here. It didn't matter that the antenna worked or maps didn't work or Siri didn't work.
Look at Samsung.
Okay.
Samsung, Samsung shows you this stock is probably the best tech company in the world.
You can have fires in the pants.
Up in your pocket.
Okay. But this company has slowly raised the price on all of their phones, $50 on the 8 and stuff like that. We're getting to, if you want bought the 256 gigabyte iPhone 10, it's going to cost you $1,150. $1,150. So what I'm saying,
be put into your full package, right? So you almost don't even know
to have people think, you know what, I'm going to get the 11 when they get the facial recognition or the thing right.
How about the services that we like talking about? Again, there's different reasons why you're buying Apple and why it was growing into possibly a better multiple, which is exactly what you want.
You're faced with a massively aging
the stock needs to hold.
That is ripe for an upgrade no matter what. So whether it's an 8 or whether it's a 10, you're going to see a lot more upgrades. I think it's super important to keep that in mind. So when you talk about bumping up, unit, sales, et cetera, by 2 million, the number is going to be fine. I think that the stock will go to $175, $180, and you probably take it off. That's the runway here. But it's all about the fact that this is a very aging install base with a massive sort of upgrade tail to it that could last a quarter or so.
Still ahead. Fox's $400 million bet on the World Cup falling flat after the U.S. men's soccer team failed to qualify for the big game. We'll tell you what it means for the media giant. Plus, the so-called sharing economy has taken off, but the stocks they are supposedly disrupting are also surging. We'll explain why when Fast Money returns.
What is money? How much money should a nation create? Who benefits from too much money? And who benefits from too little? How much should money cost? Who should allocate money? And on what values? Every week, we seek answers to these questions with our best minds. Indianomics, the only show that questions the politics of economics. The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia, and Biba.
What's hot and what's not? Buy in or sell out?
We keep track of all the market movements, so you cut to the chase and make the right call.
Post your queries on moneycontrol.com or SMS 51818.
Our experts will help you customize your stock portfolio and plan your investment strategies.
Your stocks at these times. Only on CNBC-TV18.
Brought to you by magicbricks.com and Renault Capture.
They're India's wealthiest, the most elusive class. They're only 1% of 1.32 billion Indians. And they hold 58% of the country's total wealth. You know them, and yet you don't. They are India's elusive A-class. We took a look inside their minds in a first-of-its-kind study, the Affluent India Media Consumption Survey, powered by Cogent USA, conducted by Market Strategies International. Through 7 months of exhaustive research, 500 hours worth of response data with nearly 1,300 affluent Indians, and found out how they consume business news, what they watch, what they choose. Over 70% of them chose CNBC-TV18 amongst their topmost choices. For the quickest to break news, the best stock recommendations, the best analysis, the best research team, and the most credible anchors across all 8 parameters. 98% of affluent investors watch CNBC-TV18, the channel of choice for affluent India.
major inroads. Take a look at this chart of market share. You'll see that Lyft has upped its portion this year to 25%, and it's done so by infringing on Uber's territory, which was at 80% of the market at the start of this year. It now sits around 70%. But keeping that momentum is not going to be easy. While Uber's had no shortage of distractions this year, it does now have a new CEO, and it may be raising a huge amount of money from SoftBank. So to compete, Lyft may have to raise more money itself and spend more. Here's what the company's co-founder and president told us in an exclusive interview today about its path to profitability.
In terms of profitability, the focus for the business right now is creating the most long-term value for our shareholders. And that doesn't necessarily mean optimizing for profitability today. If we were doing that for today, we would be profitable today. We've raised $2.5 billion. We have the majority of that in the bank today, and we're making investments using that capital in what we believe will be a much more valuable future.
Now, Melissa, I also asked him about IPO plans now that Uber has said that it would go public by 2019, but all he said was they'd do it when the company is ready. Back over to you.
All right, Deirdre, thank you. Deirdre Bose in San Francisco. Despite companies like Lyft, Uber, Airbnb, and VRBO attempting to disrupt the travel space, hotels and auto companies are at all-time highs. Marriott surging a whopping 71% over the past year. Wyndham up 62%, Hilton up 51%. GM, which is an investor in Lyft, up 42%. So despite the rise of the sharing economy, are these stocks undisruptible? Seabird.
Look, I mean, I think the hotels in general are. I mean, I think the millennials and the way their spending habits are, there's been a massive shift. You look at a Marriott, I mean, this is a company that's been doing super well. I mean, they're looking at growing their free cash per share roughly 13% until 2019. That's, for me, structurally intact. So
what's the millennial trend? I'm confused what you mean by that.
The spending trends, travel versus buying items or buying, you know, different the shopping trends.
But not Airbnb or...
Airbnb's had its sort of gun to its head from the standpoint of the way you look at New York City and you can't stand in Airbnb. I mean, there's been restrictions and what have you, but I do think travel and traveling and staying at a higher end sort of, you know, destination for a lot of these people is an important part of their life now.
I'd rather stay at a, I don't know, you name the motel chain versus an Airbnb.
Right, Motel 6. I think that's the key to
anything, yeah, absolutely, as opposed to an Airbnb.
I've stayed at 2 Airbnbs this year on family vacations, and it's been seamless. It's been amazing. I'm with you, though. I struggle the idea of staying at a Marriott. I was just in London, and I stayed in an Airbnb right in the middle of Mayfair.
Yeah, but
to me, I actually think it's not just millennials. I think you have the whole argument wrong.
No, if you're a high-end consumer, I think it's totally different. If you're going to go to Hawaii and stay at a house,
why do you think Airbnb and some of this ride-sharing stuff is working? It's working the way millennials operate their lives. They're not going to go to Marriott.com. They're going to go on their tricked-out iPhone or whatever 10, and they're going to. That's why you got Airbnb or something like that.
Look, the bottom line is investors overreact to these secular trends, and they take this view that suddenly companies are dead. A company like GM is absolutely competing in EV. They're absolutely competing in rideshare. They own a piece of Lyft. People, and in the hotel space, these hotels, maybe they're not Airbnb, but guess what? They are now leasing rooms. They are not buying rooms. They're very capital efficient. They've changed their game. I mean, this is the whole story. People counted these industries out, that these legacy companies are thinking with their head in the ground.
Why is it, Tim?
I mean, it's crazy.
Great point.
Idiotic to think that way.
But don't you think it's weird that all of a sudden investors woke up to this in GM like a month and a half ago, and the stock's up 25%? Well, you were actually sucking wind with it for a couple years.
Not really. If you look at this stock over a few, no,
it was down 20%.
Dan, first of all,
that caught on to it, Dan.
You don't know how I invest this thing, and it trades at a 6x multiple with a 6% dividend yield at certain times in this industry. That is well worth owning, and it was well worth owning, especially when it got cheaper to buy more, because people assumed this car company.
And especially with the utility vehicles and the SUVs on top of the pickup truck line and all the rest of it that actually has been kicking in, not just for Ford, because everybody always just looks to Ford, but you go to GM, if you go through the line, they actually produce more trucks than Ford. But everybody just puts the Ford F-150 against this and that. GM's been doing a great job there, and the EV is growth area as well.
Are you skeptical? Stocks just seem to wake up all of a sudden over the past month.
That's a great point. I mean, Dan Niles said this in the prior segment. He said, well, investors are looking for cheap stocks and finding reasons to justify owning them. That's exactly what happened with GM over the last month and a half. I think Deutsche Bank said that EV is going to be a big thing, and then autonomous is going to be a big thing. And then they said, well, I can see this thing having a 15 times multiple, trading now at 7 times.
Let me make a point on that. You're right. I agree with it. So like General Motors, like the stock took off when they started talking about electric vehicle investment. And look, I'll tell you right now, again, that's a paid-forward
took off on
scenario.
hurricanes.
Right, but they're getting
it.
Pulling
forward the old school sales
getting
that
the
people
whole
say are
aspect of,
unsustainable.
We need to talk about
you don't know
going
what the
up against
catalysts are.
One at a time, please.
Walmart's talking about going up on the e-commerce, going up against Amazon. I mean, they have a small revenue percentage of the pie against Amazon, but they're talking about it. Any company that's catching wind of that and trying to get that sort of tech multiple, if you will, on a retail type stock, I don't agree with it. So I'm with you on that. GM, I would stay away from.
Again,
stay away from. But Marriott's a totally different company.
Can I just make one point real quickly? I mean, I would rather own GM with its market cap at nearing $70 billion than Tesla at this point. And I mean that seriously because I actually think what I'm saying is...
That's not a huge stretch.
Okay,
I agree with that.
Well, it is to a lot of investors as of 6 weeks ago, Tim, when Tesla had $10 billion market cap greater than GM.
I think it's okay to own both.
You got the Tesla smoking mirror.
So what I'm
sorry,
saying is that if you're a GM investor and you believe in this emerging tech theme for them, this is a company that has $140 billion in sales, trading at 6.5 times earnings with a pretty fat dividend yield, a good management that Pete likes or whatever. I'd say you want to invest for this thing for the long term.
But you weren't saying that. You weren't saying that 6 months ago.
What I'm saying is all
that was still there.
Last word.
All that was there.
I'm sure we can fight all night.
We may.
You might.
We will.
I'll leave, but you guys can continue. All right, still ahead.
We got GNR.
We got GNR.
Retail on pace for its worst week in 2 months. Dan Nathan once called it the worst chart ever. We'll see if he still thinks of it that way. More Fast Money still ahead.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out. So Bata is a buy and Aurobindo Pharma is a buy.
Keep taking each day as an independent day and trade accordingly.
NSE Closing Bell at these times on CNBC-TV18.
Closing Bell brought to you by Fine Cure Pharmaceuticals, Nanonia, and Biba.
She started her career with modeling when she was only 15. She turned to Bollywood and rose to fame with her debut film. She turned entrepreneur with her production house Clean Slate Films and has also launched her own clothing line. She's the only Indian actress with 2 films under her belt in the 300 crore rupee club. Well, you guessed it right, I'm talking about Anushka Sharma.
Hi, this is Anushka Sharma. Catch me on CNBC-TV18 Weekender.
What is money? How much money should a nation create? Who benefits from too much money? And who benefits from too little? How much should money cost? Who should allocate money? And on what values? Every week, we seek answers to these questions with our best minds. Indianomics, the only show that questions the politics of economics. They're India's wealthiest, the most elusive class. They're only 1% of 1.32 billion Indians. And they hold 58% of the country's total wealth. You know them, and yet you don't. They are India's elusive A-class. We took a look inside their minds in a first-of-its-kind study, the Affluent India Media Consumption Survey, powered by Cogent USA, conducted by Market Strategies International. Through 7 months of exhaustive research, 500 hours worth of response data with nearly 1,300 affluent Indians, and found out how they consume business news, what they watch, what they choose. Over 70% of them chose CNBC-TV18 amongst their topmost choices. For the quickest to break news, the best stock recommendations, the best analysis, the best research team, and the most credible anchors across all 8 parameters. 98% of affluent investors watch CNBC-TV18, the channel of choice for affluent India.
Q2. The company is saying it expects total U.S. video subscribers to decline by about 90,000 in the quarter. Melissa?
All right, Julia, thank you. Julia Borson in Los Angeles. Dan, I think you've been in and out of AT&T.
I've been on it twice this year.
Yeah.
I sold it last week at 39. I still think that the Time Warner closure, that's going to be a big catalyst for this stock, and likely you see it back over 40 at this point. I don't think today's news is particularly damaging one way or another. And I think that going back to the Apple conversation, I think let's see what the uptake is for these really high-end phones. We know the Pixel's coming out, that sort of thing, because that could be something that affects their subs in Q4.
5% dividend yield. You like it?
I would never buy something that's the word defensive immediately makes me think of dividend yield. When people buy because of that, it's a bad reason to buy. So no. I'll tell you what, this T-Mobile and Sprint talk and all of what's been going on there and all the options that have been hitting in there for months now, that's been incredible. I'm still in both names because I still think that's going to be a very interesting number probably by the end of November.
I'm along the name because the dividend keeps me comfortable. It's a range-bound stock. I think there's a challenge around 39.5. They're bringing out their broadband, their high-speed broadband. It's a benign pricing environment right now. There's no reason not to be in the stock with this merger.
Does the debt ever bother you though when you look at these the debt? When you look at the debt of an AT&T, for instance, do you ever look at that number and just staggered?
Not in this environment, Pete. I mean, I think they've been able to actually refinance their debt at better rates. Again, that's why they're paying a nice dividend. Right. I think this M&A element is big.
All right, still ahead. Retail getting crushed, tracking for its worst week in 2 months. So how much worse can it get? Our traders have got some clues. More Fast Money still ahead.
What is money? How much money should a nation create? Who benefits from too much money? And who benefits from too little? How much should money cost? Who should allocate money? And on what values? Every week, we seek answers to these questions with the best minds. Indianomics, the only show that questions the politics of economics.
She started her career with modeling when she was only 15. She turned to Bollywood and rose to fame with her debut film. She turned entrepreneur with her production house Clean Slate Films and has also launched her own clothing line. She's the only Indian actress with 2 films under her belt in the 300 crore rupee club. Well, you guessed it right, I'm talking about Anushka Sharma.
Hi, this is Anushka Sharma. Catch me on CNBC-TV18 Weekender.
The clock is ticking, and we have reached the most crucial hour of the trading session.
Hello and welcome to Closing Bell. I'm Sonia Shenoy.
Everything could change in an instant.
You could argue that it's buy on dips. You could argue that it's sell on rally. A smart trader would say it's both.
Tune in to find out what could make or break your trades.
It's been a very good comeback for the markets.
This is a market which should rally more, maybe go to all-time highs.
As our experts analyze the market from every angle to give you the inside story.
Arvind remains a short sell even in this market.
Several individual stocks are breaking out, so Bata is a buy and Aurobindo